Welcome to Dollars and Cents with your host, Jeff Davis and Chris Coleman from Falcon Financial Management.
Good morning, Gainesville, Ocala. It is Saturday, January 26th, and you're listening to Dollars and Cents with your hosts, Jeff Davis and Chris Coleman. Jeff Davis, Certified Financial Planner, President of Falcon Financial Management, creator of the Integrated Wealth Management Process, and a man recognized by Barron Magazine as one of the top 500 independent advisors in the country. He's also an individual who's recently been nominated into the University of Florida Athletic Hall of Fame under the category of wrestling. Way to go, Jeff. My name is Chris Coleman. I'm an investment advisor representative and managing partner at Falcon Financial Management, and someone who wants to say thank you to Police Officer Ronnie Pirtle for my ride along with him in Leadership Gainesville, which I will come back to in just a moment. Behind the glass, we have Miss Lisa Meadows. Lisa, how are you today?
I'm doing fine, everybody. After I got through that fog, I'm much better.
Well, fantastic. You're looking bright and bubbly today.
Yeah.
Bubbly's the word.
That's the way to be, bubbly.
There you go. There you go. Have you ever heard of Leadership Gainesville by any chance?
I think I've heard of it, but I don't know a lot about it.
Gotcha. Mm-hmm. It's a program that's sponsored by the Chamber of Commerce. Mm-hmm. Individuals from a wide variety of professions apply to the program. You get accepted, and you get the chance to tour the community is the best way I can describe it. Once a month, we all meet at the Chamber of Commerce, and one day we did like a social programs where we rode around, went to one of the housing projects in town. We've done a local.
I like that.
Oh, it's fantastic. One time we did a local government ride around where we went up. Some folks went to High Springs, some folks went to Alachua, some folks went to Newberry, and it was kind of like a game of what's the game where you go to different locations and find hidden things,
I'm
like a treasure.
Because there's one also on the internet and on phone now you can do.
Oh, it's kind of like a treasure hunt, I guess
like
would be. But meanwhile, we went and met different. Well, this month the experience has been to get to do what we call a police ride along.
Ooh, that's fun! Exciting.
It was outstanding. And the guest that we have today is also participating. He's doing his ride along tonight. We're going to come right to John in just a second. But I wanted to take the chance to say thank you to Ronnie Pirtle. He took me around with him from 10 p.m. to 3 a.m. and we broke up parties.
We get to see what they do.
Yeah, and
as a news person, I've listened to that police radio a lot in my life. I have great empathy for what they do. Most people do not hear all the things they go through.
He did. He had numerous occasions where he had to make decisions of because they had a lot of leeway. How aggressive he wanted to be with the individual, and he could have changed some people's lives, with if he took a more
tough call.
But he was conscious that they're students, and they don't need this kind of thing on their record, considering where they are. And his use of judgment was absolutely outstanding. But I wanted to thank Officer Pirtle. I had a great time. He's a very kind soul, and also Jan Patterson at the chamber. And there's one other thing I've got to touch on. That's our town hall meeting that we're doing in cooperation with the Sky. Thank you guys very much. That's going to be on Tuesday at the Millhopper Library right off of 43rd Street. It's from 6 o'clock to 8 o'clock. We're going to have Jeff is going to be there, Dan Chalmers, who's a local CPA here in town, and Kevin Downey. The idea being a lot of folks are confused for things that have gone over in the past. We were talking about the fiscal cliff. The fiscal cliff is coming. The fiscal cliff is coming. Then it was kind of anticlimactic.
Not for teachers.
Yeah. Well, there's so many things going on with what's happening with state plans for.
No, I shouldn't just say that because police, fire people, everybody's involved in this.
Yeah, and that privatizing of people's pensions.
Yes.
The shift is from as we've often talked about, from company type plans to passing it on to the individual. And there's still more tax changes to come, and our guest today is going to help us in regards to a lot of those things.
Nice.
And then the estate planning component. Our strategy as financial planners has always been that if you combine the works of a quality CPA, a quality estate planner, and a financial planner, that you have the ability to address a lot of issues in your finances.
Don't laugh, but that's what my mother always said.
Well, God bless your mother.
If you don't have a good, she was in real estate, and then in horse breeding as she got older.
Yeah.
And she said, if you don't have a good CPA, a good financial planner, and a good attorney, you will not do good in business.
Well, God bless that woman. She's a great American. Well, in our Leadership Gainesville class, I've had a chance to meet a lot of really, really good people. And considering the changes going on with the fiscal cliff, one of the great firms here in town is James Moore and Associates. And I had the chance to meet John Vandoozer, who's a CPA and manager over there. We were riding in the back of a bus on one of these rides, and we got to talking. He said, I've heard you on the radio and stuff. And I said, you ought to come on. And the crazy guy decided that he would.
Yay.
So I'm really glad to have him here. John, how are you today?
Good, Chris. I want to tell you thank you.
It's great to have you here. We're going to get into some things, but before I forget, I had the opportunity to go over to their office, and John's going to tell us about James Moore and Associates. I had the chance to meet Roger Swanger, and also I know Julia Thomas over there. Some really, really good people at the firm.
Well, we appreciate it, and I'll tell you, they're a pleasure to work with.
Well, fantastic. Now, you're in the business, and you've got an excellent display of credentials. Tell us a little bit about James Moore and Associates and the firm as a whole.
Sure. So James Moore and Company, it was founded in the 60s by a UF professor, James Moore, big surprise, and he retired sometime in the 80s, and so the firm actually has 3 offices. It's one in Daytona, one in Tallahassee, one in Gainesville. And we have about 100 employees, so we're a pretty legitimate sized operation. We're a full service accounting firm, which means we offer the traditional tax services, audit services, bookkeeping. But what makes us different is we also offer a wide array of non-traditional services. So we have a outsourced accounting service where we act as the CFO for some large corporations. We have one of our new services that we're very excited about is our Lean service, Lean Six Sigma. And what that was we were talking to our clients, and they expressed to us that with these economic times right now, you got to do more with less. And so what we've done is we've tried to take our expertise in business and take our understanding of how businesses operate and really look at the processes of a business and try to figure out ways that we can help eliminate the redundancies, eliminate the bottlenecks, and help businesses do more with less. So we've really tried to focus on our clients and focus on helping them grow. So we're full service. We have a wide variety of clients, and I say we have a wide variety. We have all the way from public companies down to little old ladies. So we love our little old ladies.
And so do insurance companies. They get low rates. They're not in a lot of accidents.
And so my role in the firm, I'm actually a manager of tax services. So I focus a lot on the tax side of the arena. I do a lot of tax compliance, which is filling out tax returns. I like to call putting numbers in boxes. That's what I do. And I also help with tax planning and consulting. So I help individuals kind of plan for their taxes, plan to take advantage of any opportunities that they have, and help them just manage everything. So that's what I do in the firm.
Oh, that's fantastic. Now I got to ask you this crazy question, totally off the topic. You said fill in the boxes. When you were in elementary school, did you ever color outside the lines?
Yes.
All right. I want to hear that. I don't know the accountants. They're in the box. No, he's a rebel. John's a rebel. Well, your firm has a great reputation. I can remember I moved to the Gainesville area in 1997, and James Moore was one of the first firms I heard. You have an excellent facility over there off of what is your actual street address?
5931 Northwest First Place.
Beautiful, but
so
it was the
behind
old,
the mall.
Yeah, it was the old Naylor building. Yeah, and they've moved across the street. Have excellent facilities and capacity there. Wanted to have a chance to thank you and the folks at James Moore for coming on today and helping with us. We've often talked about in retirement planning the importance of maintaining principal to prolong through so much uncertainty of a longer lifespan. And we use the concept of 4% distribution rate to maintain principal, meaning if you had $1 million, you'd have a $40,000 income, and that's what it would take to maintain the principal of the $1 million to get a $40,000 income. One of the biggest bandits in regards to being able to achieve that goal are the effects of taxes. So I wanted to talk some taxes today. We'll do more in our town hall meeting, and we'll get in more depth. But having the chance, meeting you through Leadership Gainesville is kind of how we got here. And before we jump into that topic, you need to say hey to your wife, because she's going to want to hear that.
Well, hey, Lauren. And I forced her to listen. So I hooked up the radio last night so she could listen. And so she's listening, and I'm very excited. And also want to say hello to my 2-year-old daughter, Vanessa, who's just a joy, and she's so sweet and beautiful. But she's probably asleep right now, so she's not listening. But
Well, that's why I had to get you there. I didn't want to send you home in any kind of trouble there. You and I went over a lot of things. We had a great conversation when I went by your office and had a chance to visit with some folks. And one of the things we put together a basic outline about why to use a CPA.
So I think to answer why use a CPA, I think you want to first question, when is a good time to use a CPA? So when you're looking at it and you're trying to decide, in my life right now, when is a good time that I need to get a CPA? And I'd say I'd point to your life changes. If you get married, you have a child, you start your own business, you're planning for your retirement, it's probably a good time to get a CPA on your team. Mm-hmm. So, you like Lisa was saying, you need a good CPA, a good financial advisor. You need all those on your team so that way you can achieve your goals. And so that's kind of the big time when it's a good time to get a CPA. Also, if the tax code is complex. And so if you're not comfortable with your taxes, it's time to get some help.
Very good. Very good. I know we often talk about, we use what we call the integrated wealth management process, an evolutionary, holistic, strategic planning program based on a conversation about your financial affairs for the rest of your life. The document that is produced in that process and how important the accountant is in that role. You plan out for 30 years of what you think, which is usually a linear progression of how their finances are going to work. And then you start getting into things like the complexity of the tax code and ever-changing tax code. Tell us a little, you got your master's, and it was from the University of Florida?
University of Florida.
Correct. And you used a term that social engineering, I guess, was the term. But tell us a little bit about that.
So first, let's talk about how complex is the tax code. So I love this. This week, I was reading an article, and the National Taxpayer Advocate, which basically what that is, there's a separate division within the IRS that doesn't really report to the IRS, and they're supposed to be on your side. Mm-hmm. So if you have an issue with IRS and it's an administrative deal and you can't get something resolved with the IRS, you can request the help of a taxpayer advocate, and they can be on your side within the IRS. So the National Taxpayer Advocate, Nina Olson, the head of this division, she testified before Congress. She gives an annual report every year. And so she said that one of the top challenges of tax compliance right now is that the tax code is complex. And then she noted that in her report that there's been 5,000 changes to the tax code since 2001.
Good.
5,000 tax code changes. That's like almost 500 a year.
You know what Homer Simpson would say. Joy!
So 5,000 changes. And then yesterday is an exercise because I thought this would be fun. That's how nerdy accountants are.
I
thought it would be fun. I Googled how many pages are in our tax law, right? How many pages are in our tax law? Well, it turns out, per Google, there's 73,608 pages in our tax law. So I was like, well, how do you visualize 73,608 pages?
A warehouse.
So I took a ream of paper. A ream of paper is 500 pages, and it turns out that's 2 inches high. So if you were to stack 73,608 pages, you'd have a stack that's almost around 24 and a half feet. So to put this in perspective, okay, you take my two-year-old daughter, Vanessa, sweet as she can be, and you stand her on top of the head of an adult male giraffe, and and you compare that to 73,608 pages stacked up, and the tax code is taller than that.
Oh, well, all right. That stereotype that accountants aren't creative just went out the window. Your daughter on the head of a giraffe.
Yep.
Holy.
The tax code's taller than that.
Yeah.
So, and I mean, this is what we deal with as citizens. This is what our government is doing to us. We have to comply with that much paperwork in order to follow the law. So that's how complex is the tax code. But why is the tax code so complex? Mm-hmm. So I got 2 points here that I think that kind of explain some of it, and you can't really explain politicians because they're not rational sometimes. But so one of the things that they do is called social engineering. And I learned this from Dr. Boyles, who's the infamous, famous tax professor at UF. So social engineering. So Congress uses the tax code to induce you into following certain behaviors. Mm-hmm. So, and the best example I can think of is home ownership. So we all know home ownership is the American dream. Everybody wants the house.
Little pink houses.
The house, the
per
car,
John Cougar.
2.5 kids. So home ownership is the American dream. So what did Congress do? They incentivize you to buy a house by giving you the benefit of deducting your home interest and your property taxes. And they put limitations on there, but the gist is if you own a house, you can deduct your interest and your property taxes. They wanted to incentivize you to give to charitable organizations, so they give you a tax deduction for giving to charities. We wanted to push alternative energy, and we wanted to subsidize alternative energy, so they give you a tax credit for buying solar panels and putting them on your house or your place of business. They wanted to help out manufacturers, and so we have something, it's a real long technical term, domestic activities production deduction. Domestic production activities deduction.
You're not going to ask me to spell that, are you?
No.
Good. Thank you.
Accountants are famous for acronyms, so that's our D-pad. And so, and what that does is that gives a tax break to manufacturers. So what they do is they try to push certain behaviors by writing stuff in the tax law. Mm-hmm. And every one of these that they write in can be any number of pages, and it adds that much layer of complexity. And then you also have special interests. So we all love lobbyists, right?
Oh, yeah.
They enrich our lives.
Who's your buddy?
So, and there's tons of various tax credits, loopholes, and deductions. One that's really interesting to me is called the Coca-Cola exception. So if you give, as a business owner, you give one of your vendors a gift, you're limited to $25 of deductibility. So you can give them a $100 gift, and you're only going to get to deduct $25 of it. Well, there's a Coca-Cola exception that says if you give like a Publix a display and you go set it up and there's certain rules, you have a higher limitation for your deduction. Mm-hmm. So what Coca-Cola had good lobbyists that came in and helped them change the rule just for them, so that way they could get that benefit of that advertising for setting up that display. Mm-hmm. So it's kind of an interesting thing. So you have special interests all through the tax code. And so that's what really makes the tax code so complex, is because you start out with a base tax code and then you just start adding complexity on there by them trying to push certain behaviors or allow certain behaviors.
We're going to come back to that in a second. But for the listeners out there, knowing when's a good time to use an accountant and what are the tipping points when it's like, you know what, I'm better off going to irs.gov, printing a 1040 and using a 1040, and when is a good time to decide, you know what, I really need the help of an accountant right now? I
don't think there's any right answer to that. And I laugh because one time we had this guy come in and he said he wanted to use a CPA for religious reasons. So we were like, that's great.
Amen, brother.
I want to know what religion that is.
Yeah.
But so I mean, it really depends on your comfort level, and it depends on who you want on your side. There's a lot of do-it-yourselfers out there that have a very complex tax return and probably shouldn't be doing their tax return. But if you're not going to call a repairman to fix your toilet, you're not going to call an accountant to come do your taxes. So I don't know if there's any right answer, and I just point back to, what are you comfortable with? When you finish your tax return, do you feel good that it's right? Yeah. And what we bring to the table is we try to make sure that what we do is right. And we have a lot of experience and we have a lot of expertise in this.
Oh, man, fantastic. I don't mean to move you too far down the list, but we talked about how do you find a good CPA? What are some of the characteristics you look for?
So I think, if you're going to settle down and you're going to say, okay, I need a CPA, where do I start? I would say the first thing you should do is ask your friends, ask your neighbors, ask people you can trust. Mm-hmm. We work off a lot of referrals, and I'm sure that you do too.
Oh,
and,
yes, sir.
There's no better advice than somebody you trust giving you a name of somebody they trust. And once you get a few names, interview them. I think that if you're going to develop a relationship with somebody, you need to be able to sit down with them and talk to them and have a conversation with them. And any good CPA who wants your business should be willing to have an initial meeting with you in person for free, just to talk to you. And find somebody that you can communicate with. I think that's the most important thing. Not all CPAs are good for everybody. So you need to find somebody you can relate to, and you can find somebody that you want to communicate with, because as a CPA, we try to be your most trusted advisor, and that's a relationship. And, relationships, whether it's with your wife, your CPA, your coworkers, is built on trust and communication. So if you can't trust your CPA or you can't communicate with your CPA, it's not going to be a beneficial relationship.
And a CPA, unlike a wife, you don't have to fight over the remote. No, that idea about a trusted advisor. I know, our office, certain things are strategically placed because you're going to have conversations that are very deep, depending upon the complexity of your taxes. I know in the financial planning business, oftentimes there's situations with children where you're having to create things for special needs that they may have. And you really do. You get to know those clients on a very deep and personal level, and you need someone that you can confide in and know that it's a confidential relationship, one that you can trust them with information.
Yep, that's exactly right.
Fantastic. Now, we were talking, you and I were going to talk about some of the changes to the tax code, but when you were having your conversation with Julia, you brought up a very important topic in regards to identity theft and some of the things you're seeing. I wanted to touch on that today.
Sure. Identity theft, especially in the tax realm, is a growing problem. So just to put out some statistics, in 2011, the IRS identified 335,341 tax returns, claiming a total of $1.9 billion in fraudulent refunds. I mean, that's just money going out of all of our pockets because as taxpayers, we're going to have to make up that difference. And, the IRS system is probably a little antiquated in this regard because one address in Michigan filed 2,137 tax returns and received $3.3 million in refunds.
Good Lord.
That's crazy. It's absolutely crazy.
How did they get through the system? That's what amazes me.
Yeah. And it's just the system is antiquated. The system wasn't designed to catch that layer of sophistication that the criminals have developed. So what to do if you suspect ID theft? Because that's the big thing. If you think your identity's been stolen, what do you do? And the IRS actually publishes a guide, and I would advise anybody and everybody to go to irs.gov. You can search in identity theft, and you'll find the Taxpayer Guide to Identity Theft. And this is a guide that lays out how to prevent identity theft, how to spot identity theft, and if you're subject to identity theft, what to do. So, and I'll tell you, identity theft is very painful, and we've seen it. And what ends up happening is you have to fill out a whole bunch of paperwork. You got to file a police report. There's a special form that you have to file with the IRS. So you got to send them a photocopy of your driver's license and your Social Security card, and there's a lot of work that you have to do. And the worst thing of all is that big fat tax refund that you're going to get is going to take a really long time for you to get it. So it's just an awful thing. So how to prevent identity theft? One, protect your Social Security number. There's a lot of times we'll fill out a form for a doctor's office or some just miscellaneous thing, and they'll ask for our Social Security number, and you'll put it down, and you're only strong as your weakest link. So if there's an opportunity for you to not give your Social Security number, it's probably a good idea. And if a business really needs it, they'll ask you for it. Two, check your credit often. They recommend check it about once a year. Secure your personal info. One of the things that you need to make sure you do is don't carry your Social Security card in your wallet. And then don't give your personal info to somebody you don't know. So if somebody calls up and asks you for your Social Security number, tell them no.
Negative, ghostwriter. Can't have it. You can ask, but I won't give it.
And when you say it like that, it sounds like common sense, but so many people fall prey to so many very convincing schemes because somebody calls up or sends an email and they get their. This is how they make their money, is bilking people out of their information.
Oh, and they've gotten so much more creative. You get a letter in the mail, some sort of offer for credit, and they have a phone number on the bottom, and you call them up, and you think they make it sound just like you're talking to a credit card company or something like that.
Oh, I know.
And it's hard to tell. And seasoned professionals in the business have fallen prey to these things. And those kinds of decisions are usually made in the heat of a moment.
Right.
It's not like you had all the time in the world to think about. No, okay, let me weigh the good and bad about giving this number out.
So I would just caution everyone that's listening, just be mindful that it's out there and protect yourself, because you don't want to go through it. Mm-hmm. I can promise you. I don't want to go through it. You don't want to go through it. So that's something to keep in mind.
Oh, fantastic! Now there were some changes that did come about in the tax code.
Okay.
And we've talked on here a lot of times about the AMT, the idea that you submit your tax return and you're going to have your taxes computed one way, and then there's the AMT, which will be computed another, and whichever way the IRS likes the best or is most beneficial to them is the way they're going to take it. Program designed back in the early 70s to close loopholes. But as you were talking about 5,000 changes in the tax code since 2001, you can imagine how many since the early 70s. So let's chat about that.
So AMT, I like to say, is one of the worst things that Congress ever did in relation to the tax code. And like you said, all it was meant to do was just target, I think I read 155 wealthy families to make sure that they paid some level of tax, because they were just loopholes to oblivion. And what ended up happening, whenever they set it up, they didn't index it for inflation. Mm-hmm. So every year since then, Congress has had to fix the AMT by changing some of the elements of AMT for inflation. And this year, finally, with the fiscal cliff deal, they finally put a permanent index for inflation on AMT. So AMT is fixed. It's not gone.
I mean,
so
we're
it's
not
still there.
Yeah, we're not going to have this. It's not going to come up every year like it has been. But that's not to say it's vastly improved. Am I hearing you correctly?
Right. It's still an awful deal, but it's not. It's not something that's going to be a hot bargaining chip every year. So it's very. We're happy, but we're not happy.
Certain benefit to certainty, but there's ways that. What's the where the setting is for the AMT?
So
don't dig up his. Man, God bless the guy. He's got the master tax, and I bet he could have gone right to the. But I'm not going to drag you down. But the idea is that people still can get caught up in the alternative minimum tax. But at least this time we know how the accountants know what they're going to be working with, and when they're doing the computation.
And the important thing to know is that there's no time bomb ticking, basically saying that Congress has to do something before the end of the year. Otherwise, half the country is going to be subject to AMT. So that time bomb is gone. It's still there. It's still awful, but it's just maybe a little bit better now.
Well, that's fantastic. Now, there was a lot of talk about, if you were December 30th, we still didn't know what was going to happen to the tax code, and it was like as if this big bomb was about to go off, and it's kind of anticlimactic. Not that we don't have a lot of changes still to come. I think people have pushed it to the back, but there's still more to play out. Were there any deductions that came about? And I realize we're still close to these. Is there anything that came out of that strikes your fancy?
Well, the big thing about the fiscal cliff deal was there wasn't anything new. However, they did extend a lot of provisions that were already there, and they also made permanent a few provisions. One of the big things that I think we're excited about is they made permanent the $5 million exclusion from estate tax. So that says if you have an estate and you die and your estate is under $5 million, which is the value of your life insurance, your house, anything that you own, you're not going to be subject to estate tax. So that was a big thing because it was scaled to go down to $1 million, which is.
You should have heard the phone calls in our office as it was, when it was $5,125,000. It was like, well, not many of our clients would qualify for that. It wasn't a big deal. But when it was going down to $1 million,
right?
Oh, it was going to be a game changer, and people were frantic trying to get under the wire.
Right, and so this helps that. They also kept the tax rates the same for individuals that don't fall into a very high income bracket. And the high income bracket, they said, was $400,000 for single individuals and $450,000 for married, filing jointly. And so the tax rates are the same as they were under the Bush tax cut regime. And then after that, the highest tax rate now is 39.6%. They kept capital gains.
Oh, John, I'm sorry. Police got caught up on the phone. We didn't get our warning. Folks, if you'd like to give us a call at Falcon, it's 352-375-7977.
Join us next week at this time for Dollars and Cents with Jeff Davis and Chris Coleman from Falcon Financial Management on News Talk 97.3 The Sky.